Good morning, this is Ron Brown. It's the 27th of May 2023. I'm going to do market analysis. I'm going to do this on the fly, and I'm going to release this video as part of the webinar series that I'm doing, and it's available to everyone. I just want to show you how I use HGS, and so I'm just going to incorporate it into the webinar series. Anyway, I call this webinar series the Unleashing the Power of HGS Investor Software. There is a playlist that's available for all of the seminar videos, and I will post the playlist to our Facebook site, and also I'll send it out to the groups or the bulletin board involved with HGS software. This webinar is about techniques to locate low-risk trades and control risk, and the theme is the market is your teacher. There are lots of newsletters out there. You can pay a fortune for other people's advice, but all of the information you really need is contained in the software if you know how to get to it. Here's my standard risk disclaimer. I'm just going to read these last two sentences. Any stock, index, or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. Now, this is just a chart I was looking at from a user smart group, but I'm going to go ahead and go through my process here. I'm going to use my webinar series of scans and warehouse views and charts and so on. There are those who subscribe to the seminar, or the webinar, I'm sorry, are getting the charts and scans as I go through the process, and then they'll be available to everybody in the Insider Club when the webinar series is over, and it's going to run anywhere from 8 to 12 weeks depending on how quickly I get through material. But what I want to do here is get started. I'm going to go into my market analysis user groups, and I've really cut down on these, the number of groups. There was just too much in there, and I wasn't using it, but I'll make both groups available for people if they want them. I'm just going to click on that, and now I'm going to go to my top-down process, major markets. Click on that, and you can see that I'm in my major markets plus, which includes a few ETFs and the major markets. I'm just going to leave this set up on the screen for now so I can have both a warehouse and a view, but I want to go to a market chart, and I'm going to use the Nasdaq internals. I'll just start with the first one, and then I need to go to the Nasdaq Composite, and you can see yesterday the gold rush was on, especially in semiconductor stocks, and this is what the composite looks like. I'm going to hit my alternate 3 key, and what that does is shows us a long-term view of the Nasdaq, and then I'm going to click on my alternate W key to change this to a weekly chart. So you can see the high back here, and I'll put a crosshair on, and then I'll hit alternate I, which brings up the date, and the date was approximately 11/26/21. And here's where we are right now. Going to change to a different chart. I'm just going to go to one of my basic white charts here, and I have to make this a weekly chart. Then I'll zoom in, and then I'm going to hit my alternate A keys, and it brings this tool up. What I want are or is the Fibonacci retracement tool. So let's go up here to the top, take it all the way down to the bottom, and you can see that this rally on the Nasdaq Composite has regained nearly 50% from the high to the low. So when this gets up here to this level, the 50% retracement, we'll see if if it runs into resistance or if it can break through there and take this market back or the Nasdaq Composite back to the old highs. Now, something that really stands out to me, the volume was really strong on these 2 weeks right here, but over the past 3 weeks, even with this big move up, the overall volume is below the 90 period simple moving average line. I'm going to delete that tool and close the annotation tools. Going to right mouse click and I'm going to edit the indicator volume price analysis, and I want to put the VPA flags on here, and this is still the weekly chart. Let's see how they did. I haven't done this. I'm doing this on the fly. Here's a low volume test. Here's a confirmation of that test. You can see that right up here. And then here is high volume up bar closing on the high indicates strength, and this is on the weekly chart. Effort to rise, and then it stalled. You can see that there was an upper wick here, so there was some selling at the end of that week, and then we had several days down. Here was a VPA flag, no demand, a sign of weakness, and that's because this volume bar here is weak compared to the prior 3 weeks. So it went down, and then there's a no supply here. It did follow through the following week, and then there was a long black candle. And no VPA flag there, and no VPA flag here on this big white, long white candle, but you can see the volume was pretty heavy on this. And then it's gone up for several weeks in a row. Here's a negative high volume down bar after an up move indicates weakness. That was for the week. We had this week here was a volatile week. You can see that it opened here, traded down here, and then closed near the high, and then the past 3 weeks or 4 weeks after that, it's closed in the upper range. Well, this one, about 2/3 of the candle, and then it took off. But like I said, volume has been light. Let me draw an arrow here. Whoops, wrong color. I need to put something on here that's visible. Volume was highest here, and then it's been going down on an extreme up move. And I believe that is because of the narrowness of the move up. On Thursday, I posted on the Nasdaq chart that I'd never seen anything like that. A huge move up, and the internals were negative. I'm going to edit my indicator, VPA. I'm going to turn off the VPA flags on this, and I'm going to go back to the daily chart with an alternate D. And this really gives you an idea, or gives us an idea, of the momentum over the past several days. And here is Friday's huge candle up, and notice the volume is lighter than the prior day. Now I'm going to flip back to the market charts. Here's just the standard Nasdaq chart, and this is the comparison to the S&P 500. Now with this blue line shooting up like this, it just tells us that this Nasdaq Composite is outperforming the S&P by a great deal. I'm going to go over here to the scorecard view and performance versus the S&P 500 over, let's say, a 15-day period. It's outperformed by 16%, over a 10-day period by 17%. This is outperformance compared to the S&P 500. It outperformed it by 5% yesterday. I'm sorry, I'm looking at the semiconductor. That's all right, that's the leader. The semiconductor index. I need to get down to the Nasdaq Composite, which is right here. I was on the wrong line. Sorry about that. Anyway, outperforming by 1%. But look at the semiconductors that I was looking at, outperformed by 5% yesterday. Over the 15-day period, the Nasdaq Composite has outperformed the S&P by 4%, and this is obviously where the strength was in the semiconductors. What did the Nasdaq 100 do? It outperformed the S&P by 6%, which is a big number. Now let's go down the list here, look at some other charts. This one has the AD line in it. This is an anomaly. Bring up this. Okay, we're moving up here, and this is moving down. This is why I mentioned that the breadth was not all that great. Now look, yesterday, you can see the advancers did lead the decliners. If I bring up my, I have to go back to this. Bring this up, and then let's look at the advancers versus decliners. It was not quite 2-to-1 on this huge move up here. So that's why I'm saying that the breadth has not been all that great. And look at the prior day. These were the advancers, these were the decliners. And compared to the prior day, the market, the index was up dramatically. We all saw it. So this is a very strange market. And everybody, I mean the institutions, the big money, they're jumping in. They're all chasing the semiconductors, which is very evident when you look up here at the top. Okay, I'm going to go back to my first warehouse view here. Make sure I get the composite this time. And let's go down the list a little further. Here's a McClellan indicator. Now, when the market's really strong, advancers over decliners, you're going to see this line climb up here like it did back here. Look at where it is right here as this market, the composite, is out to a new recent high. It's just not showing good internal strength. Okay, let's go on down to the next one, new highs versus new lows. Okay, the index is out to a new recent high. As I said, these are the new highs versus the new lows right here, and they're about even. I'm going to zoom in, zoom out on this. Well, it's hard to tell. When the market really sells off, these new lows really spike up there. So it's hard to get a decent perspective on this. Let's go full screen and see if it's better. Well, back here at the peak in 21, you can see the new highs were dominating the new lows. On these big sell-offs, you can see the new lows dominating the new highs. And back here, with this nice move up, it's really not, there aren't a lot of new highs compared to new lows. They're actually very close. Let's look at the AD line now. And you can see, even with this strong move up, the AD line, and this is for the Nasdaq Composite, has been going down. This does not mean that you cannot make money in this market. You can, because you just have to find the stocks that are going up, and that's what the purpose of HGS Investor. I'm spending time on the market here just to show you that it doesn't seem quite right to me. Is this a beginning of a huge up move in the market? Well, I think we're going to need a little more participation rather than just a few leading stocks or indexes. And these stocks, let's just look at the stocks. And I'm just going to go down to that my daily chart here. I'm going to zoom in to the this level. Now these VPA signals on here don't mean anything because we don't have volume with the SOX. But if I drop down a folder here and then go to my number 2 view, this is a Major Markets Plus, which allows the ETFs in. Here's the SMH, which is an ETF, semiconductor ETF. I'm going to bring it up, and you can see that volume has been tremendous over the past couple of days as this, on the NVIDIA announcement, this ETF gapped up, and there's an effort to rise, but also a warning here that a upthrust, which is a sign of weakness, which just means with all this tremendous volume here, it's a warning that there's a lot of selling in here too, but it was clearly dominated by buying because it closed near the upper range. And then look at this on Friday. So beware, it's extended. Now let's take a look here. I'm going to put some arrows on here. Here is a test. Here's a confirmation of that test. Here's a no supply. Here's an effort to rise coming out of this resistance. Effort to rise. Effort to rise. Test, and then a pullback for a couple of days. But buyers came in and supported here because it closed in the upper part of its range. And then the gap up on the NVIDIA news, and then the follow through yesterday. Heavy confirming volume, but it's extended. Let's take a look here. I'm going to clear this, and I'm going to drop down to my favorite chart, and let's put this in perspective, or let's put it in context, I should say. I don't have an industry group on this ETF, so I'll just move this up here, and I'll put, I want the crosshair. Let's take a look at this. Now I'm going to go back over here and refer to these columns. Most of you know that I use the 3D 3-6 crossover as a potential buy point and the volume point of control. And this crossed over 10 days ago, the 3 and the 6. And that would be right here on the effort to rise. I believe that's right. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 on that effort to rise. The volume point of control turned positive at the same time. You can see the histogram right here went from slightly negative to positive. So this is where the move started. Another confirming signal here is a pocket pivot, which is represented by the blue line. So all the factors coming in: effort to rise, pocket pivot, 3 crossing above the 6. The 6 didn't cross the 18 until the following day, but the 18 was above the 50, let's see, all the way to back here. So never did come back down. But here's the trigger right here. And that's, it really didn't look back. This is a little bit scary here, but anybody who bought there with the fan is in place, you can see the fan was in place. 200, 100, 50, and 18, and they're spread apart. The fan was not, well, let's see, it was in place. It looks like it was in place right there. If not, still the trigger was back there. So it worked well for anybody who had been watching this ETF. So the date on this is May 15th. If you look down here in the corner, just out of curiosity, I'm going to go in my historical groups under my non-index files, and we're going to look at the stocks and groups up. Going to go to May. 15th. And I'm going to go into the warehouse view. I'm doing this on the fly. I haven't looked. And let's just go down here to my end of day scorecard view. And let's sort on the industry groups. Percentage price change. And you can see that on the 15th, if you look over here, stocks and groups moving to the upside on the 15th of May. Look what the dominant groups were. So HGSI is picking them up, and several of them. If I bring this up and look at the industries, application software, semiconductor devices, 9 and 7, 16 of them combined between the devices and the manufacturers. Just out of curiosity, let's go back a day. Well, that would have been on a Friday. Let's see what was showing up then. See, I don't see semiconductors in here at all. So on that crossover day that I showed you, that's when the move started on the 15th. Now I'm going to look one more place. I'll bring my designer up. A while back I created some scans to find the stocks that were moving intraday, and I've been saving them in my non-index files. Stocks up and down May. And let's go to the 15th. And $15 and up stocks on the 15th. Let's click through to that. And you can see that these are the stocks that were coming up intraday on that day. And what happens, these are captured at the end of the day. So this is what the market looked like on the 15th. This is showing the last date today, but this is the 15th up here, and you can see that during the day, these stocks, the semiconductor stocks and the manufacturing stocks, these are the ones that were showing up on that day intraday. So rather than waiting until the end of day, these stocks were available. Let's just look at one. I'll just take the top one here. And let's see, let's find the 15th. I'll bring my information window up. You can see, okay, here's the 15th right here. So this stock was showing up coherent on the 15th right here. There was a strength seen returning after a downtrend. If I bring this up, you can read the whole thing right there. So this was the 15th on this one. Let me just change to the industry group. Well, I don't want to do that. I don't want all the stocks. I just want a few of them. So am I still on the 15th? Yes, I am. Okay, so let's look at Lattice. Bring this up. This one fell after that day. Okay, right here is the 15th. It started moving up. Then there was a shakeout on that one. MRVL. Okay, I'm looking at the 15th right here. That caught this one perfectly. Prior day low volume test is a confirmation of this test plus an effort to rise plus the volume point of control turned positive. The 3 turned above the 6 on that day also. What a great trade that would have been. What I'm showing you here is that these stocks appear using HGSI either at the end of the day or intraday with my intraday scans. You don't have to wait and look at charts historically, like so many videos will show you, well, this what happened. Yeah, I'm showing you that, but I'm also showing you that I have the records to prove that these stocks were triggering on those days. I'm going to end this report right now. I don't want it to get too long. I want everybody to have a safe and happy Memorial Day weekend. And if I get another chance over the weekend, I may put out another video in preparation for next week's webinar. But I wanted to share this with you. Thanks for listening.